All right, welcome to the Grain Market Podcast here with Beck's Matt Bennett here, talking to you just a little bit about an active week that we kind of see ahead. And so basically, USDA was called back to do a report this week. So the November WASDE report is actually going to get released. October, of course, we did not get a report. We didn't get an update on yield, production, demand, all these things. And so clearly a lot has happened between now and then. We're going to go through a few slides. But just at the outset, though, I certainly want to acknowledge the fact that this market has been quite active. I mean, we've actually seen the soybean market really scream higher. Corn is what I would call more of a reluctant follower. We've seen a little bit of strength here and there. It's certainly better than what it was in the thick of harvest. But at the same time, when beans go up $1 and corn goes up 15, 20 cents, it doesn't really seem like, a huge yield increase. Before we go too much farther, I also want to say, it is Veterans Day. So those of you that have a veteran, or if you are a veteran, certainly want to thank you for your service. My dad is a Vietnam veteran. So certainly one of those days that we certainly need to honor people who've made a pretty big sacrifice. But I'm going to share my screen and try to make sure that I've actually got my my volume doesn't go away from me. And so what we'll do is we'll share this. I'm going to go back and check and make 100% sure we're good to go. And it sure looks like we are. So as far as the first thing I want to look at, I apologize. First thing I want to look at is just, hey, what is the trade expecting here? Okay, so what the trade is expecting, for carry out for corn to stay above this 2 billion, for soybeans to stay above 300 million, and wheat, to stay in the same basic area that it's been. Okay, now what everyone wants to know, of course, is yield. What are the average trade estimates? Average trade estimates so far. Now we've seen these estimates all over the place. But as you can see, I believe this one came from Reuters. Average trade estimates 184 on corn and 53.1 on beans. Last month, you saw 186.7, or 2 months ago, the last report that we got, 186.7 on corn, 53.5 on soybeans. Now, the very interesting thing is that we've seen, for instance, the StoneX survey, as you can see here, at a 186 yield. Another survey would be the Farm Journal survey. It came out at 178.5. So I'll tell you what, there's some extremely wide gaps in thinking here as far as what we might see for some sort of a corn yield adjustment. And there's no doubt that there's a lot of different things that could happen. Now, if we look, what generally happens between September and November. Okay, so obviously we get an October report as well, but typically you don't see a massive yield change, as far as corn's concerned, over the course of 2 reports. And so obviously this is a big report here because we didn't get anything in October. But what might we see as far as adjustments go from a historical perspective? And as you can see, there are some outliers there. You go back to 2010, 8 bushel drop from September to November. Is this the type of year we could see that, as dry as what we were? Now, last year, we were awfully dry to finish in the West, but we didn't get that yield adjustment lower until the January report. So would we see it in November? Anybody's guess. It's tough to outguess it for sure. Now, if we look at, from a demand perspective, from a world stocks perspective, I mean, I'll tell you what, world stocks are not burdensome. We continue to whittle down world stocks of corn. It's something I talk about quite a bit when I'm out speaking. If you heard me at any of the technology days, I certainly was hitting on it pretty heavily. World stocks are not ample. I would say that they're not burdensome. We're certainly not going to run out of corn by any means, but we continue to whittle these things down. And so clearly it puts us in a position that if acreage would happen to drop this year, or if we take another yield hit lower, which a lot of us feel like we might see, it could certainly cause some issues on down the road as far as how much corn are we going to have, whenever we're sitting here going into this next harvest next September. Obviously, exports have been phenomenal. Could the USDA make an adjustment there? It's certainly possible. I don't necessarily expect it. I want to show you my S&D balance sheet at the far right. That's where I want you to focus. Essentially what we've got there is 181.7. That's the yield estimate me and the guys on my team came up with. We're actually below the average yield estimate. We've heard a lot of growers say, hey, my crop was pretty darn good, a little less than last year. We've heard a handful of growers, say this is the best crop they ever had. And then we've heard a handful of growers say, hey, you know what, this crop was a major issue for me. We had a lot of disease pressure. And so after talking to several hundred growers, essentially we felt like this yield's probably just a little closer to maybe 180, than maybe other people in the trade. Now, if we did have that, I'm still thinking we've got a 2 billion carry. As you can see there, ending stocks at 2 billion and change. And why is that? Because we're actually making an adjustment. The adjustment we made was feed and residual usage. And so you've probably heard me talk about this. I know I've written about it, but essentially we are sending a lot of corn to Mexico to feed cattle that typically come north of the border, and we feed them up here. We butcher them up here. A lot of that corn is getting exported out. I think their feed and residual usage number, which is this number, 6.1 billion bushels. You can see the September report here. 6.1 billion bushels. I think that's way too high. So if they do bring production down, I think they bring that lower. Now, if they keep production up at 185, I think that you could still expect a fairly close number to what they already have. So there's a lot of moving parts here. We're certainly hoping for a bullish report, but thinking that it's going to be something that's going to skyrocket us is probably asking for a lot. Now, whenever we look at soybeans, yield change from Sept to November, relatively speaking, from a percentage standpoint, we actually have seen a little more adjustments there, as far as soybeans have been concerned. We've heard a lot of good yields, though, and so it's tough for us to think, yes, the late season beans got hurt. There's no doubt that dryness certainly was an issue, but do we expect a 1.5 bushel decrease here this year? I don't expect that. I'm not saying it can't happen. It's certainly a possibility. Now, if we look at world stocks of soybeans, there's a totally different story. We've got plenty of soybeans in the world. I wouldn't say they're burdensome necessarily, especially considering we just harvested a massive crop out of Brazil. Last year, their crop was just huge, biggest they've ever had, and so world stocks did not increase. And so that's a really good thing to see, because obviously demand is outpacing, that complete, or at least staying with the production increase that we saw. Clearly, exports haven't been worth a darn, as you can see. I mean, we're significantly lower, whereas on corn, we're running well ahead of pace last year, and even ahead of pace of the USDA target for this year. Soybeans have not been, and that's part of the issue, of course, is the lack of Chinese business, which we've seen start to creep in. We don't have any definitive answers there just yet. If we look at the balance sheet as far as soybeans are concerned, 53.5 is where they came out last month. My team came up with just a little smaller yield of 53.3. If I'm not looking for any big adjustments there. There's no doubt in my mind you could make the case for it, but by all means, I don't necessarily expect that we're going to see anything major come about there. So as far as the report's concerned, you could see a significant amount of adjustment. You could see a lot of volatility. Typically, report days, you get a lot of volatility. What do I expect to see? I think a couple of different things are going to drive the market here moving forward. The USDA report certainly has the ability to do so, but we definitely have Brazilian dryness. Some of you guys that are listening, use the Ag Market app. We actually did a video today with Eric Snodgrass. I highly encourage you to watch that. If you want to figure out how to get a hold of that, let me know, and I will certainly have that. And I may even have him on here one of these days to kind of chip in. But by all means, parts of Brazil and Argentina are fairly dry right now. And if that dryness would persist, there's no question that this market could get pretty ramped up. We need to see confirmation of this Chinese business. They said they were going to purchase 12 million metric tons of soybeans. They have bought beans since that verbal agreement was made. But we need to see these beans purchased in mass quantity over the next 6 weeks, really. I mean, they're supposed to basically buy these in the month of November and December by the end of the year. I don't think they're going to ship them by any means. I don't even know that we can. I mean, our river levels are awfully low. We've definitely got some shipping issues right now. We can ship out of the PNW, uh, and that would certainly take a little bit of that load off. But by all means, we need to see Chinese business. And so, if the Chinese step in and buy beans, if Brazil has weather issues, if the report is friendly, and certainly we could see this market continue higher. I've had a lot of you ask, should we be rewarding this market? You look at soybeans, for instance, and anytime you get a dollar rally in the market, in my career, it's typically not served me well to ignore that type of rally. But what kind of additional rally could we see, in this bean market if we would have Brazilian dryness, for instance? And history would suggest that whenever we go up above $11, most of the time we end up going to 12. Am I trying to get bullish on you? Not necessarily. What I'm trying to tell you is selling an increment after a dollar rally is not a bad idea. If you want to hold on to some beans or re-own them on paper, whatever it is you want to do to keep some ownership of beans, I'd recommend that as well too, because I do think that there's a chance you could see this rally continue, and it could be a fairly strong one if the right things fall into place. As far as corn's concerned, it's probably very dependent upon what this bean market does, first of all, and second of all the talk on acreage for 26 is something that I've hit on a lot over the last several months. There's no doubt that you'll see a little bit of an acreage drop this year. How much is going to probably drive this corn market, on down the road? It could be as low as 91 or 2 million acres, or it could settle in at 93 or 4 million acres. But after 98 last year, you've certainly got to expect that this acreage should drop. So appreciate all the questions. I wanted to touch on the report because I had a few people asking if I would cover that. Next week we'll talk about what the report looked like, and we'll try to go over hopefully even better markets than what we see today. So thanks for tuning in, and have a great week.